Good afternoon. Let's talk about containers. Let's talk about tank. Let's talk about bulk, disruption, high rates, strong starts. Will it continue? These are some of the buzzwords, or let's say ingredients in this delightful lunch we're gonna have today. The guest today in our Tidbit studio is Peter Sand from BIMCO. He's an expert in all these things. And since we started the Tidbit series back in the first Corona lockdown, we have had the pleasure having Peter. This is actually the third time in this setup. So Peter, no, the third, yeah. It's because Peter, he has been taking us in these roller coaster ups and downs in the shipping, in the different shipping segments since back in April. So how is the status today? This is why we have invited Peter in again, as BIMCO and Peter and his colleagues has just done another awesome analysis, which was sent out recently. You will also have the link for that one, so you can dive deeper into the topic reading in there. But today, Peter is going to serve you the highlights, or let's say the snacky bites of this analysis. So this is what Tidbits is all about. It's 15 minutes of talk. It's accompanying your lunch. So please feel free to do a little leverpostejmad at home, and so you will have your lunch today while you are listening along to Peter. And then it's cozy settings, because this is not one of the usual webinars, boring, long, and with blurred backgrounds. Here we like to be in our personal settings. Well, Peter, he has cheated a little bit today because he's actually in the BIMCO office, but I have borrowed the second floor of my neighbor's house, and as the internet in my house is really, really bad. And the funny thing is, at 12:30, he's actually going to have a lunch IRL with his friends. So by the end of this tidbit, we will have the atmosphere of people coming in, having a lunch party. Wow, this is something we are all looking so much forward to have again and see all our friends. So I'm Henriette Dybkjær. I'm the host of the tidbit today. I'm from Marok. This is the brand new super cluster of maritime and logistics here in Denmark. So let's have a cheers, Peter, and get started, and I'll pass over the floor to you. Cheers, Peter.
Cheers, Henriette. Thanks for having me back, and thanks for your kind attention up front, all of you. Without much further ado, let's just dive straight into it, and please enjoy your lunch. As always, while I'll give a short brief on some of the things that have caught my attention in particular over the past couple of weeks, month, and quarters. Henriette basically threw this title at me saying that, are we soon back at the pre-pandemic growth trend for seaborne transportation? I think that is what we are all focusing on. When will we get our lives back? Not to take the word out of the mouth of the infamous BP CEO at the point of time of the burning of the Deepwater Horizon. But nevertheless, I think, well, just to be outright clear, who we are in BIMCO, we are here to serve you, and the more members we are, the better service we can offer. So please do not hesitate getting in touch if you're not already a member of our association. One of the things that I like to do when talking about the shipping market is to create some images in your heads, because that in many ways is the brain glue when giving this talk a thought later today. Hopefully you will recall that ground control to Major Tom. It's not only a lyric from David Bowie, but it's also an illustration of the dire straits that the oil tankers are facing at the moment. I'll give you a brief on that shortly. Container shipping, well, you can check out anytime you like, unless you're stuck behind the Ever Given. But it's also a matter of much more than the seaborne leg of transportation. Logistics and supply chains are all over the place. And I think this was a really good time for shipping to go global in media-wise, at least, as all of a sudden, I think it's fair to say that everyone is fed up talking about COVID and vaccine rollouts. The Ever Given being stuck in the Suez Canal was much more exciting. And for dry bulkers, steady as she goes. Let's just bring more of this seasonal high levels of freight rates around Cape sizes going sharply up recently, with the rest of them going sharply down. It is all about China, as always, for the dry bulkers. On the right-hand side, you see basically my haircut. And on the left-hand side, as I said, it's all about the rollout of the vaccine on a global scale. And when I say global scale, I mean, of course, it is increasingly difficult to get your head around. What does this mean actually when nations and regions, Europe is opening up gradually, the North American continent is opening up gradually. When will we see international relations also from a travel perspective open up again? And most importantly, of course, also when talking about certain aspects of the shipping market, it's also a matter of when do consumers start spending more money on something else than goods. For instance, services like getting a haircut, right? That is, of course, biting into to the chunk of shipping demand, or at least say e-commerce and Far East Asian exports at large. To you and I, not only refurbishing our home offices, also getting a fully equipped basement with a fitness studio, but surely also just getting out there and spending our money on something else. So these are surely some of the mega trends. Those of you who want to dive into the micro trends, feel free to do so at a later point in time. But overall projections again, and this illustrates very much that we see divergent recoveries impacting shipping. We see very high growth in emerging markets and developing economies. You see on the right-hand side here, the estimates from IMF. They are not carved in stone. They may not necessarily look like this once we hit the full year of 2021 nor 2022, but at least in terms of indication and where we're coming from, also in terms of the abyss of last year, where advanced economies took the largest hit. You can also see, even though you cannot add 2 percentage changes up just like that, when you have 2021 figure, which is lower than the 2020 figure, which comes from a higher base, obviously we are not in a fully recovered mode in economic terms. But this, of course, changes and impacts very much trade lanes, in particular the oil tankers, which is first up, because oil demand have been growing rapidly over the past decades in emerging markets and developing economies, whereas the we could call it the OECDs, or the advanced economies, but OECD is a better term when talking about oil tankers, because oil demand may actually already be past peak demand in OECD. North America, especially US, being the latest one to join in, with Europe basically seeing peak oil demand already back in 2011. So much to take away from that. When will we reach pre-pandemic level in terms of oil demand? Well, in 2022, according to these charts, but as I can only say here, these things do change very rapidly, and not only occasionally. But this is the best update we have right now in terms of illustrating not only where we came from in terms of pre-pandemic levels, but also the abyss that we faced, in particular in the second quarter of last year. Spool your time back 1 year and we were all in a hard lockdown. It may feel as if for some of you out there, as you may be facing your third or fourth wave of infection cases rising, because working in a global environment like the world of shipping, obviously we tend to see worries from the rising number of cases in India in particular, which is very relevant for the tanker market, but also in Brazil and Argentina, that is facing increased troubles as they also lack a vaccine rollout. In the other end of the market, we see the fleet, because as you know, it is all about the fundamentals, demand at one end and the fleet serving that demand at the other end. And one of the things, obviously, which is high on anyone's agenda this year is, okay, with freight rates being in the doldrums, crude oil tankers and oil product tankers gotta be finding a graveyard somewhere ASAP, trying to stay in the real life, as Henriette just do, ASAP, abbreviation for right here, right now. Get into that scrapyard sooner rather than later. But it isn't as simple as that. We may see some quotes of scrap steel prices at $500 per lightweight ton with displacement tonnage, but it's not what makes owners scrap their ships. If you go back 1 year, the tanker markets were red hot. Not Capesizes, but crude oil tankers and oil product tankers, they were making somewhere between $80,000 and $200,000 a day. That, of course, is money in the chest now. So it is not like any owner out there is really short on cash. And that is also spilling over into to this low level of demolition activity. But in terms of demand and in terms of oil being delivered from some of the key suppliers into to the seaborne sector, at least, Brazilian crude oil exports and US crude oil exports is, of course, super relevant. As I alluded to in my opening here, it is all about the developing and emerging markets, many of those found in Far East Asia. And when you have exports of oil from the Americas, it doesn't get much better than that, because the hauls are the longest. Forget about Middle East, that is all short haul these days. So what you want from the market is higher exports from the US, Gulf of Mexico, and from Brazil. And as you can see, most recent numbers from Brazil jumping in March, and a huge part of that going into China. On the right-hand side, you have the US crude oil exports. You see China getting back into the market in May last year, but also staying in there with a declining share, being much higher in previous years, then massively impacted, of course, by the trade war, and then subsequently lifted to some extent by the Phase 1 agreement. So these at least are some of the things that I'm watching very closely going forward. A brief on life at Mars currently. On the left-hand side, you saw some positive kickback into the LR2 tanker market from the Suez Canal incident, as LR2s were all of a sudden finding themselves with a very short tonnage list out of the Middle East, boosting some of the naphtha demand from Saudi Arabia into Japan and the likes in Far East Asia, boosting rates in excess of $20,000 a day. But if you go back to what would otherwise be a normal strong winter season, look at the pathetic low rates that we have experienced in this past season, normally traditional peak season. But of course, it is a result also of demand moved forward during those days when OPEC Plus alliance started to pump at will, as they basically broke down their negotiations and their corporations. Right now, we know that they are much more in charge, and they handle the cuts very elegantly. Just one brief slide here from the US, as it also appears to us that the domestic recovery looks good, whereas imports and exports, I mean, international business is basically coming down to a large extent. You will also later today see from our site an in-depth analysis on the US crude oil market, exports, imports, production and consumption. That should be released within the next couple of hours. So stop by bimco.org or follow us on LinkedIn, social media, Twitter, like that. Hopefully you will find that to be interesting, because we also go into more details on not only gasoline supplied, but overall oil products supplied into the US market. And there you can fully see that the recovery looks well and strong in the US with a successful rollout of the vaccine, much in contrast to how they have dealt with the COVID-19 pandemic in the past. All right. The post ever given grounding disruptions, that is likely in our view to impact the market in coming months, not only the shipping market, but very much also hinterland connectivity and the connections from basically from production to consumption area. Perhaps not so much in Europe as would have been the case if the disruption would impact the American North American ports, because there are fortunately more optionality in terms of ports and terminals to call in North Europe as compared to US West Coast, for instance, and the San Pedro Bay that saw basically volumes from the Far East double in February. Obviously, that was good for business, but it also just extended the troubles that they have been experiencing now for at least a good half year. So, what really happened in the Suez Canal? Well, Calvin and Hobbes may be spot on here. I'm sure we, at some point in time, will get an official report stating at least some of the obvious facts and leaving out some of the perhaps not so clear assessments. But well, this might be just one idea or suggestion onto to what basically happened. But it was indeed the days where Joe Public learned about the global shipping industry, having this ship crossing the Suez Canal. I've made this chart especially for today, illustrating what happened in the immediate aftermath of the reflotation. And as you can see, the southbound convoys were prioritized in the immediate aftermath of getting Ever Given reflotation. You will also see when going into April later today, I will update on our Twitter account the coming or the first 2 weeks of April, also in order to establish how the backlog of ships lying at either port side anchorage, Suez anchorage, or the great bit of lake in between, how that was then dealt with in terms of increasing what would otherwise be approximately 55 transits a month, going all the way up to 70 and 80 ships a month as they cleared the backlog of up to 400 ships. Straight on to North America and that 100% jump that we have seen into to the North American continent. This is not only US, it's also Canada, to some extent Mexico, and it covers East Coast, it covers West Coast, it covers Gulf Coast, and everything. But what basically made that special surge come around, it is not only a result of super strong stimulus from several packages to directly paid out to the American consumers, but it was also a matter of a very slow recovery in the US manufacturing sector. If you see on the right-hand side here, they basically struggled throughout the year. And when demand was really pending up and being underpinned by forking out cash to consumers, obviously, they had nowhere else to go but their key providers of consumerized goods in the Far East Asia. You see retail sales rebounded to end up a bit more than 3% for the full year last year. But look at the staggering numbers in the early parts of 2021. We see for the first 2 months, US retail grow by almost 9%. So it's super strong and it's ongoing. Obviously, as I said, at some point in time, they will start spending money on something else than goods, and that's when we're going to see a solid weakness. I think I have already dealt in details with this, but I just think that courtesy to Lars Jensen on the right-hand side, that put together this magnificent photo illustrating those 25 ships that was sitting and waiting to berth around St. Pedro Bay in the morning, Central European time on 12 April. What is the message in a bottleneck? The key takeaway here is basically that globalization is the work of decades. Do not let it run aground. I think the whole world have been made aware of the significance of the shipping industry and also some of the say challenges, weaknesses, and strength of global supply chains. But at the end of the day, resilience comes not from autarky, but from diverse sources of supply. Do not make any mistakes around that. Speaking of a roller coaster, the roller coaster is still going up, or at least in many parts of the world. And it's all fair to say that it is spectacularly strong markets. And the more disruptions that we see in the US West Coast or in the Suez Canal, the better, because it basically just extends those extraordinary conditions that tends to keep rates on spot as well as on long-term freight rates at a much elevated level. You see that illustrated here on the three main long-haul trades out of Far East into to North Europe in light blue, into the US West Coast in magenta, and US East Coast in dark blue. Of course, much haggling, much negotiation, much worries from the shippers at one end to the liners at the other, in terms of how can we get around this? How can we manage this dramatic increase in freight costs that some importers are facing? And obviously they have difficulties footing a bill which is 5 or 6 times higher this year than was the case last year, or even especially the year before that in a normal year. So obviously many contracts are also done at much shorter times now. So in order not to log in more than necessary at the much elevated freight rates. The way we see this going forward is we will not return. I think returning to pre-pandemic level will be a disaster in this case. But let's just talk about how long ahead we are likely to expecting elevated freight rates like this. I think it's fair to say that we could easily see elevated freight rates for the full year 2021, and any kind of normalization is not likely to develop itself until 2022. And that is because this is a fully global, say, disruption in terms of equipment, in terms of shortage, in terms of drayage, in terms of rail carts being in short supply across the board. So that is all things that goes into not only the short elevation, but also the long term. When you make money, you spend money. A record high level of container ship was ordered in March, not only for ultra large container ships, as you can see in the chart here, but for the whole size scale of container ships. More than 800,000 TEUs was basically really turning the markets upside down, as that month in itself was all but encapsulating whatever was made of orders for the full year 2020. That's a good question, isn't it? Are global supply chains changing, or are they not? A question which is constantly debated, and it goes back to long before the trade war started, because that was basically where perhaps it became mainstream to discuss whether supply chains are changing, whether reshoring are taking place, whether 3D printing is bringing production back and closer to end consumption. I think it's fair to say that it's surely a double-edged sword, but what we can take away from this is that globalization is shifting down through the gears, but it is nowhere near being in a reverse. We have also seen the strength and efficiency of the Chinese manufacturing sector, as they have been capable not only of recovering very fast, but also catering to a very, very strong demand, basically forgetting well, all but forgetting about the Chinese Lunar New Year, because that is a normal seasonality that often brings around lower exports out of Far East, but not this year. Wrapping up with desserts, dry bulk shipping. It is just a super delicate dessert because this is totally off season. Just well, 2020 may not be a comparable period of time simply due to the COVID outbreak, of course, but it remains all about China. China is just super strong. Unfortunately, they are doing what they used to do when they are under pressure. Stick to the guns they know, propping up infrastructure, doing housing, doing everything that benefits the dry bulk sector. They are buying grains left, right, and center. So it's not only emptying whatever is in stock in North America in terms of corn and soybeans, but also South America and even Brazil is capable of having a good off-season peak in terms of iron ore exports, and that is of course instrumental behind that most recent surge for Capesize now in excess of $20,000 a day. Super strong markets, but will we see a return to reality? Eventually, we will. But I think it's fair to say also that that we are likely to see still a positive impact from Chinese stimuli for weeks and months to come, as markets eventually will settle also and feel the gravity of the fundamentals, as some of you may know that we're talking about in our most recent quarterly report issued approximately a month ago. And just wrapping up some of those difficulties in the marketplace, we have cleared, or at least it seems as if half of the ships, more than that used to be stuck at anchorage outside China, carrying a cargo of Australian coal, has now been cleared. But we still see plus 30 ships being at anchor, unable to deliver their cargo at the intended destination. But meanwhile, China is just going anywhere, diversifying its supplies of sources, going to South going to South Africa for the first time in 5 years, making India bring in more coal from Australia. Changing trade lanes. This is not a clear-cut positive or negative, but at least in the short term, it creates confusion, it creates inefficiency in the market. That's always good for higher freight rates. I alluded to the strong start of the year for Brazilian export. Much of that is also going into China, which is growing a bit faster even than overall exports, just as they did last year. Super strong for the market. On the left-hand side, you can see that it was a slow start to the soybean export season, but now with the first quarter behind us, they are basically back where they were last year in terms of soybean exports. As always, once we're done here, don't be shy. Go to bimco.org for multiple insights on the overall market, and of course also insights into our contracts and clauses and how we see the regulatory aspects also shaping up our industry going forward. These are just a few selections from our website. Stay connected: Twitter, LinkedIn, YouTube, and even Facebook. Henriette, who's your favorite choice for president? Let me know.
Well, I enjoyed so much how you served all these really, really awesome calories through David Bowie, the police, Steno Stoffer, and so on. It's also a good way of making it understandable for everyone. So thank you so much for your way of explaining the things, so we all can get a really good Snapchat of Snapchat. That's something my kids are doing. Snapshot of.
I know the term pre-nature, but can you be a post-teenager or something like that as well? That may be.
I think my girls, they think I'm a kind of a post-teenager. Well, thank you so much, Peter. It was really a nice tidbit you served for us here, as always, with a lot of compressed calories for us to digest. We'll hardly not be able to eat any lunch after this. I really got the point that we have to go out and spend money. Is that right, Peter?
I think the most important part now is to make sure that our mental health is also served well going forward. Not only the seafarers struggle mentally during a COVID pandemic like this one, but at my end, I guess I also need a haircut pretty soon. So do spend money ASAP.
We'll definitely do. Peter, there is the time is already 12:30. So for you out there who need to go to some other meeting, just jump out. The meeting will is being recorded and it will be uploaded to our YouTube channel afterwards. And we will, as always, send out an email to all of you who registered for this tidbit with the link to the YouTube channel where you can find this tidbit with Peter and also all the other tidbits that we have conducted since we started back in the lockdown in April. So you can still listen along whenever it suits you. But I would love to take a few questions, Peter. So I hope you have allowed a little bit of a after dinner after party with us here. So I will start with the first question, which is from, I go to the chat, Lene Mahler. She asked, do you see the threat of a possible crash of the market, for example, in the container feeder market, as freight rates are rapidly growing, as well as having a high demand for vessels being sold on the market and therefore rising prices for second-hand vessels? Did you get the question?
Well, I think higher asset values is always appreciated, so no troubles on that regard. But obviously, what we have seen from the massive also disruption of the container shipping market is that that cargo have found new ways also to flow into especially Europe, as there is a land-borne alternative also in terms of railways. It is still fair to say that that shipping, regardless of the fact that one box costs $8,000 per TEU to transport halfway around the globe, it is still the most cost-efficient way of doing it. It's much more costly to bring it on board a rail cart or alternatively fly it if you can find the space. So obviously at some point in time we will also see a normalization in those fields, and obviously the longer a spike like this lasts, people find the different ways also, or alternatives. But as I said, they are all more costly alternatives. So I think you're probably crying right now, paying much more than you would otherwise do. But at some point in time, freight rates will also come back down. This will go not only for the short sea business, but certainly also on the main haul deep seas.
And I just read somewhere in an article that MSC is actually very soon taking over from the pole position of Maersk. Do you have any comments on that one? How did they do that? It's our old friend from Maersk who is in charge of MSC. No doubt about that. But do you have a comment about that one?
If we go for the active fleet, I think it's still the light blue on top of the chart. But if you add the order book, that's what makes the difference. But at the end of the day, and I think that will also be the main thing for us to focus on going forward. Profitability is what matters, and obviously this pandemic have also taught many liner companies how to react promptly when facing demand falling from high ground to basically not to be found anywhere down the abyss. Cutting services left, right, and center, also basically underpinning at least freight rates at a level where cost would be covered and where basically also money would be made. So I think that is much more important to focus on going forward than sheer size of the ships. And then of course, what matters at the end of the day is not necessarily how many ships you own, because that basically only represents half of the capacity and tonnage you operate in the end, as every major liner company is bringing in an equal amount of tonnage from the charter market to service their global networks.
Thank you. That was a little additional question from me. So I will jump ahead with the other questions. Amadeus Joshua, he asked, what is your take on the tanker market recovery? What does it take to get back to the pre-pandemic levels? Well, you did speak a little bit about it, but could you dive a little bit deeper into that one?
Well, the pre-pandemic market for tankers was all over the place. Not only going back to second quarter last year when the pandemic was all over us, but going into 2020, I think some of you may also recall that we were not particularly positive about the crude oil tanker market going into 2020 due to a significant inflow of new tonnage in particular the VLCC sector in 2019. So when will tanker freight rates be at a profitable level? I think is a good one to aim for, and I think the question lies somewhere between 2022 is the best shot right now, but it's not as simple as that because I guess the seasonality will also at some point in time come into to force here, and the later you get into 2022, obviously the better chances they stand for getting profitable freight rates. In between, of course, we have a winter season that may bring something positive around, but I think it's also fair to say from the illustration that I showed you that what will basically be the catalyst behind profitable freight rates will be developing and emerging markets and long haul trades. So if we can see Brazil and US taking up the lion's share of the recovered demand and shipping that into to South Korea, into to China in particular, and also that we see right now India diversifying away from the Persian Gulf as they are not satisfied and pleased with the cuts of OPEC right now. So they're really going out there to supply cargoes from further away distances, and that is the real catalyst behind profitable freight rates going forward as we see it.
Well, I have another question, but if this is just something I'm wondering myself. Now we are seeing that all ships are sailing on heavy fuel, but the future seems like to be that ships will sail on ammonia, on methanol, and a lot of different like gases and very different fuels than this standard heavy fuel, so and marine diesel. So how do you think the change of fleets, when will that come into force, that we will need less tank ships for transporting heavy fuel? I haven't prepared this question for you, so you don't know if it's too much to answer. You just say we'll take it in another one. But this is one of the things I'm wondering about.
It gives me a fair opportunity to pinpoint the fact that Singapore bunker sales were published only yesterday, and it showed once again that approximately 1/4 of the fleet is still relying on high sulfur fuel oil as they have scrubbers installed on board, and the rest is being served by low sulfur fuel oil variations and a bit of marine gas oil also. But demand seems to be concentrated now in the main hubs like Singapore in particular, but also Rotterdam. But obviously, when we go forward and we look towards the decarbonization of the not only the supply chain as such and the world as such, but also in terms of shipping, 1/3 of all shipping demand today is of fossil fuels. That goes only not only for coal, but obviously crude oil tankers and oil product tankers as we know them today will obviously see a hit. I think it's also fair to say that we will also realize that much of the oil demand today is not necessarily only for the burning transportation demand. It is also finding its way into the petrochemical industry. So we will never see oil demand going to zero, as oil is being used in many different ways than for transportation purposes only. But a transition in terms of fleet, I foresee that to be more like a new batch of ships servicing to a future demand in whatever that may be. If we can have hydrogen carriers, and not only hydrogen carried as a mean of propulsion or a fuel for propulsion, but obviously 10 years from now, I think it could be around crunch time, but in between now and then, I think it's also fair to say that that the world is not necessarily on track to decarbonization. If you go by the International Energy Agency, they still see a steady growth for oil on a global scale until 2030. We in the Western world like all the good stories about the adventures into to decarbonizing, whether that's power to X or methanol or hydrogen, but there's a good couple of years to go before we will really see a massive impact. But once it arrives, I'm sure it may also be impacting us rapidly at that point in time.
Then we also got that one covered. That was one of the things I was wondering about. But Peter, as we get deeper into the decarbonization, this is definitely one of the interesting questions, how the fleet will change. And what I also hear a lot of ship owners there asking, but what should we put in our new buildings? Should we put a regular engine, or is it something different? They don't know yet, so they just tend to put the usual stuff in their new buildings, and then they'll wait and see. We saw the same with the global sulfur cap, that a lot of ship owners, they waited until the last moment to install a scrubber and so on, because they didn't really know if it came into force, point one, point two, if there came up some better alternative than installing a scrubber. So these are some of the very, very interesting issues of our business, I think. So Peter, we have two questions in the Q&A session. They are both from Bent Sangberg. He asked, what is the effect on the sea transportation from the increasing interest rates as we see in the US?
The short reply to that, we will not be able to see that in isolation. Basically our base case is also that rising interest rates are not necessarily something that we expect to be around anytime soon. The world is awash with cash, so interest rate basically being the price of money, and when there's too much money around, the increasing rates in the US is unlikely to impact the market in any significant way.
And Ben, he has another question. The steel prices are increasing. How will that affect the sea transportation? That's a very specific one.
Yeah, and I think let me address it in this way. What is holding back new building orders? Perhaps with the container shipping flurry last month as the exception. But what is happening in general terms in the new building market is that owners and investors have held back, and they have been holding back not only because of the long-ranging decarbonization issue, but more so because of the more short and medium-term energy efficiency aspects of things. So they're not really sure of how to approach this. And why am I saying this? It's because sometimes people get confused when steel prices are high and believe that will really be a massive change to the price of new buildings. No, the real say the steel share of any new buildings is less than 20%. So it's many other things that goes into the price of new buildings, in particular your type of engine, and just a few weeks ago, I think I read from one of the big main engine producers that come 2024, they will be capable of having an ammonia fueled engine ready for the market, and we're talking about two-stroke here, so that could be relevant for the entire market, and even a retrofit of existing ships to be able to burn ammonia also from 2025. So I think we have a massively interesting future ahead of us, and well, let me just wrap up and say thank you all for your very kind attention, and not only also to Fat Cat. You're a cute one there. Yeah. Thanks for having me today also.
The cat, it really loves to stand on top of the computer. Well, thank you, Peter. I think we have it has come to an end, or the cat will take all the attention from you and me, Peter, and we don't like that. So let's just enjoy our lunches now, and I hope that all of you out there got a lot of your questions answered by Peter. thank you so much for giving this very, very clear and great introduction to the market right now and where it's moving to in the new roller coaster. So Peter, thank you again, once again, and for joining us today. And my colleague, she just wrote in the chat where you can sign up for other tidbit invitations with Peter and all our other great speakers who are also researchers. So you will also have results from universities, interesting analysis presented, and all different alt godt fra havet, as we say in Danish. So I wish you all a great day out there, and thank you, Peter. Thank you to all of you. See you next week. Bye bye.
Take care. Bye.